Hey everyone, it's Zach with Palantir Research, making this video on short interest on a very calm day for Palantir stock. But today I wanted to briefly cover short interest since I came across the latest numbers for Palantir as well as the short-term graph here showing how it has increased since the last measurement. I think it's a great exercise more in retrospect than to actually take action there, but I'll go over that shortly after. So the short interest itself has risen by 13.68%, with the latest report showing about 136 million shares being sold short, which is around 7.23% of their outstanding shares. So these are not very crazy numbers in my opinion, and not supposed to get anyone thinking there'd be a short squeeze or of the sort. Plus, the 1.57 days to cover is not very high either. So for those newer investors, what does this all mean? Well, if you don't know what shorting is, it's basically the opposite bet of purchasing a stock, which is to borrow a stock and then sell it. And then you hold the money in your account there. Your expectations is that the price will go down. You make money if the price goes down because you can buy back the shares at a lower price and then return the shares that you borrowed in the first place to make that initial sale. And you're going to keep the difference there. So the biggest thing to note is that your losses are technically unlimited, but your brokerage will require you to hold a certain amount of value, of course, if the price keeps going up to ensure they don't lose too much money if the trade goes against you and if you fall below a certain threshold. Now, if you get gapped up on where the price just flies up very quickly before anyone can react, they'll probably automatically close out your position and you'll be left with a giant bill for the excess that wasn't covered by closing your position. So that can be very dangerous for newer investors. And this actually can lead to a short squeeze if that scenario happens. So if you're on the buying end, at least, you would win there. But if the right conditions are met, of course, that's the only time it would happen. And of course, that's when a bunch of short positions are closing. But like I said, this is not at all the case for Palantir right now with those numbers we've seen. But back to the point. This just shows the growing level of shares shorted, which can be a clue at least in the short term about the market sentiment on a stock, especially if you reach a zone out of the typical range for a company. As you can see from the last 3 months, short interest was steadily declining until the recent measurement showing a jump. So the pattern has broken here for now, but it is no guarantee if that's going to continue, of course, to climb or to even continue the downtrend that's been happening. Now, does this warrant any move from myself as an investor, or at least my investing style? Not at all. Nothing unusual has happened, and it remains to be another piece of information that may explain, at least in retrospect, why the price of Palantir has fallen from its recent run-up, because short selling allows those to take a bet against the stock without ever having to own it. But also, before the trend broke, the decrease in the short interest slowly over time can point to the closure of short positions as the price was climbing for Palantir and has reached their new normal range for now that we can guess. Now, this is not financial advice at all, but if someone really wanted to bet against a stock or hoping the price to go down, I am biased using towards options. But you have to remember there is a time element heavily involved here because of expiration dates and theta decay. You can sell a covered call where you can collect your premium and hopefully you'll keep your shares at expiration since you expect the stock to go down and not go over that strike price. Of course, the risk here is unlimited losses in potential profit because you may be forced to sell your shares way below market value or your desired price if the price moves against you upwards. And then the other strategy here would be to buy puts where you can only potentially lose the premiums you paid if they expire worthless. So I think both still beat the scenario of unlimited losses from short selling, but that's just my opinion. So I'm not saying to do this or Palantir will crash or anything of the sort, but I think there are much better ways for retail investors to dip their hands on betting against the stock instead of just straight up shorting it. And these are all shorter term strategies too, where if you're a long-term investor, you can just ignore the noise instead of timing the market and just eat that volatility. But what are your thoughts though on all this on the short interest for Palantir? I know this was a quick video and more informative. Let me know below, and thank you all and my channel members for watching, and see you in the next video.